The story starts in the early 2000s, a period dominated by the rise of technology. In this era, the internet was transforming businesses, and the dot-com bubble was growing. E-commerce was on the rise, the digital transformation was beginning to take hold across industries, and the seeds of artificial intelligence and automation were being sown. This trend continues today, with technology companies reigning supreme in global market capitalization. Fast forward to the late 2000s, and the world was grappling with the global financial crisis. This period marked a shift in investor behavior, with a greater emphasis on environmental, social, and governance factors, or ESG, in investment decisions. This shift was driven by a growing awareness of the impact of business activities on the environment and society, and the importance of good corporate governance. As the world recovered from the financial crisis, the 2010s brought with it a new challenge: rising trade tensions. The era of globalization, which had brought unprecedented growth and prosperity, was under threat. Disputes over tariffs and trade practices began to affect industries worldwide, shaping market trends and influencing investment decisions. Then came 2020, a year that will forever be remembered for the COVID-19 pandemic. The virus disrupted global markets, but it also accelerated certain trends. Industries like healthcare, technology, and e-commerce saw exponential growth, while others like travel, hospitality, and traditional retail faced significant challenges. The pandemic also triggered a shift towards remote work and digital transformation, as companies adapted to new ways of working. Parallel to these developments, the world was also witnessing a significant transition towards renewable energy. As awareness about climate change grew, countries began to make concerted efforts to reduce their carbon footprint. This shift influenced investment patterns, with a growing focus on clean energy and sustainable practices. Lastly, the past 2 decades have seen notable changes in consumer behavior. There's been a surge in online shopping, a preference for sustainable and ethical products, and an increased focus on health and well-being. However, as we stand in 2024, the world economy faces a new challenge: the prospect of a recession. Leading financial institutions have sounded the alarm, predicting a slowdown in the coming years. The causes? A combination of factors, including high inflation, a potential tightening of credit conditions, and a fading of fiscal tailwinds. In summary, the journey of the global economy over the past 2 decades has been marked by technological advancements, changes in investor behavior, trade tensions, the impact of the pandemic, the shift to renewable energy, and evolving consumer behavior. As we face the prospect of a recession, it's clear that the world economy is in uncharted territory, and the path forward is anything but certain. Remember, economies are dynamic, and trends can change rapidly. To stay informed, keep an eye on recent financial news, market reports, and analysis from reliable sources.